After a court defeat, Trump warns of economic chaos from the loss of tariffs. The president and his advisors have suggested that they will fight a federal appeals court ruling that found many of the administration's tariffs to be illegal. And stocks are taking a little bit of a tumble here on Tuesday as we see this news hit the wire. Kind of an interesting thing occurring because, again, we sort of seemed like we were out of the woods with all the tariff concerns, and the stock market was just going to drift off into Never Never Land for the rest of time. But we now see that there are still some risks to the tariff story. Of course, this makes sense if you think about it, because if the administration started building this new infrastructure around the income generated from tariffs, stripping that back away could lead to some economic turmoil. And that's kind of the crux of the concern here when it comes to the market sell-off. That being said, the stock market itself is overall still in what I would argue to be a very strong upward trend. We've consolidated for a few weeks here. And so I'm curious to see if we do respond to this area of support. At the time of recording, there has been a little bit of a bounce already taking place here within the first hour of trade here. You saw the pre-market sell-off and now bouncing back. So in today's video, we'll be taking a look at some stocks that I'm watching here and could potentially see some dip buying opportunities if the market does roll over for a few days. Make sure to hit the thumbs up button, subscribe, and let's get into it. First up, we'll talk about ticker symbol BIIB. This is Biogen, and this is getting a really strong, in fact, the highest score on the stock box watch list right now, and it's already making a pretty substantial move higher. Nice reaction to this upward trend line, and up it goes here as we do see buyers stepping in to buy this recent dip. If you've been watching the channel, you know recently I've been bullish on healthcare stocks, and I'm kind of kicking myself I didn't buy shares last week. Another stock that's on my watch list here, if we do get a bigger pullback in markets, is going to be Amazon, ticker symbol AMZN. When we take a look at the scoring metric here on the top stocks page for Amazon, we can see we're getting a +8 overall. Upward trend in terms of momentum, a little bit overextended here in the short run, but we do see good institutional buying. Analysts love the stock, which is a positive thing. We have a relatively good valuation compared to the last 3-year history. By the way, feel free to pause the video if you'd like. I've added some explanations to sort of a general concept of how we score here. Here is the financial metrics. Feel free to pause how we score things here. Here's a look how sentiment indicators within the stock box are scored, and of course, our technical explanations as well. Like I said, feel free to pause, or you can go to our website, a1trading.com, for more information on this. Taking a look at the daily chart on Amazon, what we can see here is you are starting to get a little bit oversold here in the short run. Overall, nice upward trend, as we mentioned. I would love to see the stock just roll over just a little bit, maybe down to 220 or even down into the 210s, the 212, let's call it, would be really attractive as you've got this nice area of support that we saw back in August, and of course this consolidation low before we shot higher. So I do like the stock at both this current area here as well as this 212 area of support. So a little bit more of a dip. I may actually be buying some shares of Amazon. Another stock actually doing quite well today is TMUS. This is T-Mobile, and T-Mobile has a pretty good score on the stock box. Let's go take a look at these shares. You can see we are looking a little stretched to the upside here, but if you do get a pullback down into possibly even this area of support, this could be a stock that I'm going to watch. So if we get a pullback down into this support level, we'll see how stocks trade, of course, for the rest of this day. Just a quick look, updated view, we can see that the opening session has been a good start for the stock market. We'll see if we just go to fill this gap right away. A little bit of the fears over the weekend. We'll see if those are overblown or if there is genuinely some more concern and we see some rollover. I still think that stocks are a bit expensive across the board, and so I'm hesitant, but going to wait to see if we can get some pullbacks in stocks that I like. And this year we have overhauled and improved the stock box, bringing it to a new level to help traders and investors spot better stocks in the markets to watch and potentially find great trades on. I use it all the time in my stock market analysis and in these videos, and for a limited time we are not just offering 40% off, but as an exciting relaunch sale, we're going to do half off the stock box. So if you're interested in getting access to a copy of the stock box, it's a one-time payment to get access to our tools and to start scanning what institutions institutional activity is looking like, what crowd sentiment on stocks is looking like, as well as, of course, what financial readings are telling you about a particular company, where fair value could be found, and whether or not the stock is cheap or expensive. So if you're interested in getting access to these tools with the relaunch sale at 50% off, I've got one extra surprise for you. If you send us a direct message using the first link in the description down below, letting us know that you watched today's video, we'll get you 55% off. This is the biggest discount we will be doing all year long on the stock box as a celebration of relaunching the product. We've overhauled a bunch of the interior kind of workings of the tool and built all these new cool indicators, and we're excited to have people trading and using our tools with their analysis. So don't miss out. This will be the biggest discount that we do on the stock box this year, and all the information can be found in the description down below. Now back to the video. Some of the bigger losers here in this, of course, are some of the sensitive stuff to tariffs, like Nike, or Fortinet is also down again here today. And I've got to show you guys what I did ultimately with my Robinhood position. The stock is down the last few weeks here and sitting at a key level of support. So I actually took this opportunity to, guess what? I officially closed out of the short call position for a profit of 8,500 bucks on this trade. This has been something that I have been fighting with for the last few months on Robinhood, but ultimately came away with a very nice profit. I still own 600 shares of the stock at an average price of $40.21. I've done really well with this stock, but in recent months, I've been selling calls against my 600 shares, which has been mostly a losing bet for me. But the calls that I sold the 98 strike price calls for a huge premium of around $21 per share, right? So I collected a huge premium and the stock rolled back over, giving me the opportunity to close out for a profit of about, I think it was about 67% of max profit, which equated to an $8,500 profit. But full transparency, the last few months, I've been selling calls on Hood and it has not been a very profitable game. I think with this $8,500 considered, this brings me back to about break even on the calls that I sold. However, I still own the stock and the profit on these shares that I own is doing quite well. We're up 151% on my 600 shares of Robinhood. Today's video is sponsored by Moomoo. And if you haven't heard of Moomoo before, they're a one-stop global trading platform with over 26 million users across the US, Australia, Singapore, Canada, Malaysia, and Japan. And Moomoo offers $0 commissions on stocks, ETFs, and options trades. They also offer free level 2 data and real-time options chain data, no extra charge. And the Moomoo platform is super advanced. They offer a really powerful options trading tool, and you can even track latest public figures holdings like Nancy Pelosi's directly within their portal. And if you want to learn something about a particular stock, just ask Moomoo's AI feature. With this tool, you can ask for trading insights on your favorite stocks. And if you want to tap into what institutions are buying and selling, check out their institutional tracker. This tool allows you to explore top institutional holdings. What sets Moomoo apart is their incredible platform for researching stocks, checking out all sorts of different analyst rating tools, and insider holdings and trades. And for a limited time, as shown on the dates on the screen right now, you can get up to $1,000 in Nvidia shares, plus 8.1% APY for US users. As you can see on the screen, please follow the criteria here and make sure to use the link in the description to get the full context behind this offer while it is available. It is available for only a limited time. And are you already trading with another brokerage, but all these tools sound pretty cool? Well, I think so too. And they're currently offering a really cool 3% match on the first $1 up to $20,000 transferred from another brokerage. So if you're looking to take your trading tools to the next level, check out Moomoo and take advantage of some of the offers available using the link and details in the description of this video down below. Now back to the video. Well, the question is, what now with Robinhood? Is it oversold? Well, I really love the stock for the long term, and so we are sitting at a pretty key level of support, and short term do look a little overextended to the downside. So I decided that was a good opportunity to just close my calls, buy them back for a profit, and we are back kind of to square one. So if the stock does shoot to the upside and we get overextended, my plan will be again to sell calls, as I love the stock, but it has such good call premium. You can make such good money selling calls if you're correct because of how expensive calls in this stock trade for. Another stock I've been watching is, of course, Google, which has had a really good run here recently and has actually started to challenge the upper end of my calls that I sold at 250 2015. On this stock, I own 200 shares at an average price of around $165.45, and I've also sold the 215 calls against my shares to collect some income. I sold these for $3.05, but currently the calls are trading for $3.70. So I'm in a little bit of drawdown on these, but I do think that Google is a little bit stretched to the upside. We've had a really good run, and I think generally the market itself has some room to just consolidate and move sideways, as I've been saying on my channel for the last few weeks. Here's an update on my Nvidia position. I am long still 500 shares of Nvidia. Stock has rolled over since its earnings report, which has ultimately led to the calls that I sold now pretty much losing most of their value. The shares that essentially with the calls that I sold, they are now worth significantly less than what I sold them for. I sold them for $1.64 per share, 5 times 500 shares. They're now trading at 30 cents. And so the calls that I've sold have kind of lost value due to time decay and because the stock itself has rolled over a little bit. And last week, Nvidia took a little bit of heat too because Alibaba, ticker symbol BABA, a notable Chinese stock, tests new AI chips as China seeks Nvidia alternatives. And this is concerning because the Chinese market for Nvidia is a huge component to their growth story. If Nvidia can sell chips to China as a big marketplace, that considerably increases the amount of money and revenue they could be generating. And for those of us who do keep an eye on Nvidia, you may remember what happened right around January 27th. This is an article from that day when Nvidia dropped nearly 17% as China's cheaper AI model, DeepSeek, sparked global tech sell-off. This led to a huge sell-off in Nvidia, which ultimately rolled into the April sell-off due to tariffs, and we saw some pretty good drawdown in the stock. Of course, since then, the stock has rebounded sharply, but it just goes to show that there is weakness to this company and the excitement around it if other companies do start to become more competitive in creating their own chips. And China being a huge marketplace for Nvidia is definitely a concern if they're less willing to do business due to sort of the intellectual property being a US product bought by China. They may have issue with that. So it is a bit of a concern for what I believe to be a stock that I love, but is a little bit, in my opinion, a crowded and hyped trade. So I do think that there is room, again, for this stock, like any stock, to pull back after you have a period of a very high level of euphoria around it. I mean, let's just remember that from the lows, Nvidia made a double up, meaning they were up 112%. They doubled their whole market value, which is crazy. Another stock that I own is Fortinet. This is not doing so well. Again, the big sell-off on their earnings. Forward guidance was not super attractive. The stock has pretty much gone sideways since that point. I do think over the longer term, I still like the idea of holding on to this company, but it's definitely taken a beating here recently. Another stock that's gotten completely crushed here recently is United Health Group. And while I've traded options on this a couple times, I don't currently have a position. However, you're sitting at something really interesting here, which is a key level of multi-month resistance for the stock. If we can break through this, this could perhaps signal that we do in fact have a little bit more of a sustainable bottom. We gapped up here recently, been consolidating, but I know a lot of traders watch this stock, and United Health is actually getting a decent score within the stock box. Although the trend here does not look particularly attractive, like you're not getting a momentum score to the upside, which as I mentioned earlier, you can scan the readings here, but basically they use the 20 and 50 moving average. So we do see momentum here really stalled on United Health Group, but a lot of the financial metrics look on a relative 3-year average basis, look very cheap. So it is a stock that I think may have some upside, and I'm watching for a breakout, because if you do get a breakout, I think there could be a trade here to the upside. So specifically looking for a breakaway through the 320 mark as a signal that I think you could have a more sustainable longer term bottom forming in the stock. They also say you should pay attention to stocks that are up on down days, and United Health is holding up okay. And just to notice, we also have Pfizer up today, Biogen, United Health. So you've got a little bit of healthcare stocks leading the charge today. Just an updated view here as I wrap up. We do have QQQ still down today, but bouncing at least for starters. The RSP equal weight S&P 500 ETF is holding up okay relative to the market weight version, and small caps actually doing okay today, down just 0.57% on the IWM. When we take a look at sectors, we have consumer discretionary getting beat up a little bit more than the others. Industrials also down here, of course. Tariff concerns, definitely a big one for the industrial build out. Software names taking a beating, the IGV ETF. But as I mentioned, healthcare noticeably holding up pretty decently. Being flat on a down day is not too bad. If we take a look at semiconductors, ticker symbol SMH. This is an ETF that tracks a whole bunch of companies like Nvidia, AMD, etc. This one's down pretty sharply here today as well, and sitting at a key level of support. If this does break, to me that could signal a larger tech sell-off could be coming here in the next few weeks. Let's watch this level around 280. And remember, if you're interested in getting access to the stock box, we will be running a very big discount for a limited time, and all the information can be found in the description down below. Thanks for watching, and we'll see you in the next one.